Welcome back to Talk Tickers. Today we're going deep on ExxonMobil's Q3 2024 earnings call. They just put up some impressive numbers, one of their best third quarters in the past decade. Earnings hit $8.6 billion. We've got the transcript and all the stock info, so let's break down how they pulled it off.
Yeah, it's pretty interesting. The whole energy sector is in this massive shift right now. Even a giant like ExxonMobil has to adapt to, stay on top.
Definitely. And CEO Darren Woods basically said ExxonMobil is changing. He kept talking about how their transformation is really driving their earnings power right now.
And a perfect example of that is their refining strategy. Back in 2005, they had 45 refineries. Now they're saying they'll have just 15 by the end of this year.
Wow, that's a huge change. What does that mean for their efficiency overall?
Well, it means they're laser focused
Yeah.
on the most profitable and efficient refineries. They've been selling off less advanced sites and really streamlining everything. In fact, they've cut costs by $5 billion in their product solutions business since 2019. Yeah, it's massive. And it shows how serious they are about maximizing value.
Makes sense. So fewer refineries, but each one running at peak performance leads to higher profitability.
Exactly.
But it's not just about efficiency, though, right? They had to deal with some curveballs, too, like that tornado that hit their Joliet refinery in July.
Oh, yeah, the Joliet tornado. That was a big one. It caused a ton of damage, disrupted fuel supplies in the whole region.
From what I read, the damage was really extensive. Woods even called it an unprecedented event, the hardest shutdown they'd ever faced.
Absolutely. But here's the thing. Despite that huge challenge, the workers at Joliet, they brought the facility back online ahead of schedule. They even beat their own recovery timeline by a third.
So they turned a potential disaster into a story of resilience and, operational excellence.
Yeah, exactly. It shows they can adapt, overcome anything, and deliver.
And for investors, that's got to be a good sign.
Definitely reassuring.
Okay, let's move on to something that directly affects your portfolio, dividends. ExxonMobil just announced a 4% increase, bringing it up to 99 cents per share.
Yeah, this is big news for a couple of reasons.
Okay, lay it on me.
First, this marks their 42nd straight annual dividend increase. It puts them in this elite group, the dividend aristocrats. Only 4% of S&P 500 companies can say that.
So this isn't just a one-time thing. It's a long-term commitment to their shareholders.
Right. And second, it shows their confidence in their future earnings. They wouldn't be raising dividends if they weren't sure they could keep it up.
Makes sense.
This consistent dividend growth, it's a really strong sign of their financial health and a steady income source for investors.
Sounds like a win-win. Speaking of wins, let's talk about their upstream production, specifically their performance in Guyana and the Permian Basin.
Well, their production hit 4.6 million oil equivalent barrels per day in Q3. That's a 24% jump year over year. A big chunk of that is thanks to their acquisition of Pioneer Natural Resources earlier this year.
Yeah, that was a major move. Seems like it's paying off already.
For sure. And they're achieving this with some really impressive tech, particularly in the Permian Basin. They're using longer laterals. Some are 3.5 miles long. It lets them access more resources with fewer wells.
Hold on, 3.5 miles?
Yeah, it's incredible.
Are they drilling to China?
Not quite.
Yeah.
But it is remarkable engineering, these longer laterals plus increased efficiency and a smaller environmental footprint are driving their record-breaking performance in the Permian.
So they're not just drilling more, they're drilling smarter.
Exactly.
And they also highlighted Guyana's continued strong performance, which is contributing a lot to their overall growth.
Right.
This diversification
Yeah.
from the shale plays of the Permian to the deep water fields off Guyana shows they can adapt and thrive in all kinds of environments.
Absolutely. It speaks to their operational flexibility and their ability to leverage tech to unlock value.
Now, even as they're excelling in their traditional oil and gas business, ExxonMobil is also making big investments in the future, specifically in low-carbon solutions. Tell me more about their progress there.
Yeah, they're definitely taking steps towards a lower carbon future. One of their flagship projects is the Baytown Hydrogen Facility. It's on track to be the world's largest low-carbon hydrogen plant.
That sounds ambitious. What's the goal?
They're aiming to produce 1 billion cubic feet of hydrogen per day, virtually carbon-free, capturing and storing 98% of the CO2 emissions. And what's even more encouraging, they've got new partnerships with ADNOC and Mitsubishi, who are not only investing, but also exploring offtake agreements.
So there's real market demand for this low-carbon hydrogen, and ExxonMobil is positioning themselves as a leader.
Exactly. This project, along with their investments in carbon capture and storage, shows their commitment to these low-carbon solutions.
But they did acknowledge some potential hurdles,
Right.
especially around regulation.
Yeah, they emphasize the need for regulatory clarity, especially when it comes to implementing the IRA's approach to carbon capture. They want regulations that focus on carbon intensity rather than specific technologies.
So focus on the results, not just the method. It's complicated, but it's good to see them being proactive.
Oh.
Now, beyond hydrogen, are there any other new ventures they're exploring?
Well, there are a few. One that caught my eye is their Proxima thermoset resin. It's a totally revolutionary material. Stronger, lighter, more corrosion resistant. They see huge potential for it in construction, automotive, all sorts of sectors.
So they're not just an oil company, they're a material science company now.
In a way, yeah, they're using their expertise to develop materials for a changing world. They've already got licensing agreements with manufacturers like Nuvocus Corporation to make rebar out of Proxima. Imagine rebar that's a quarter of the weight of steel, but twice as strong.
Wow, that could be a game changer for construction.
Right.
What else are they up to?
Another interesting one is their move into battery materials, specifically graphite for anodes. They're anticipating the huge growth in electric vehicles, and they want to be a key supplier of battery materials. They're leveraging their expertise in materials science and their access to low-cost feedstock to develop high-performance graphite. That could really improve EV battery range and charging times.
So they're not just providing fuel for gas cars anymore. They're aiming to be part of the electric vehicle revolution.
Exactly. It's a fascinating evolution.
Now let's talk about their overall financial strategy. They seem to be taking a pretty conservative approach, emphasizing a strong balance sheet and disciplined spending.
Yeah, their net debt-to-capital ratio is currently at 5%, which shows their commitment to financial prudence. This conservative approach gives them the flexibility to weather market volatility and invest in long-term growth while still returning value to shareholders through dividends and buybacks.
So they're balancing maximizing returns from their current business with investing in the energy solutions of the future.
It seems that way. They're playing the long game, focusing on sustainable growth and making sure they're ready for whatever comes next.
We'll dig deeper into all of this and explore their strategic outlook in part 2 of our deep dive into ExxonMobil's Q3 2024 earnings call. So picking up where we left off, let's look closer at ExxonMobil's strategy for navigating the energy transition. We talked about their investments in low-carbon solutions, but how are they actually planning to scale these up?
Well, one key area they emphasize is carbon capture and storage, or CCS. They've been making some serious progress in this area, securing agreements with a bunch of partners to transport and store CO2. In fact, they just announced their 5th agreement like this, bringing their total CO2 contracted for storage to 6.7 million metric tons per year.
That's a lot. What does that actually mean in the real world?
It's more than any other company globally right now. They're also locking down massive storage sites, like the one they just got through a deal with the Texas General Land Office. It's a 271,000-acre site offshore in the Gulf of Mexico. This really cements the U.S. Gulf Coast as a global hub for carbon capture.
So they're putting their money where their mouth is on CCS. But we talked earlier about how regulations are super important for these projects. What are they saying about that?
They're pushing for clear and consistent implementation of the IRA's technology-agnostic approach. They want regs that focus on carbon intensity as the main metric, rather than favoring specific technologies. You know it's about creating a level playing field for all low-carbon solutions.
Makes sense. Reward the outcome, not the method. Now let's get back to their traditional upstream business for a sec. We talked about their record-breaking drilling in the Permian Basin. Can you expand on their focus on the environmental impact?
Sure. They're using a combo of technology and efficiency to achieve that. Those longer laterals we talked about, they allow them to get more resources with fewer wells, so less surface disturbance. But they're going even further.
How far?
They're using some advanced tech to optimize well placement and completion techniques. This makes things even more efficient and reduces the overall environmental footprint.
So it's a win-win. Max production, minimal environmental impact.
Yeah.
And then there's Guyana, which seems to be exceeding expectations.
Oh, absolutely. Their operations in Guyana are a huge success. Not only are they adding a lot to ExxonMobil's production growth, but they're also playing a key role in Guyana's economic development. Like their gas-to-energy project is a great example. It's going to provide Guyana with cleaner, more reliable electricity.
Sounds like a good partnership. Now let's zoom out a bit. How do their financials and capital allocation strategy support this dual focus on traditional energy and low-carbon solutions?
Well, their strong balance sheet is key. That 5% net debt to capital ratio gives them a ton of flexibility. They can invest in high return projects in their traditional business and promising low carbon opportunities.
And they're not forgetting their shareholders either. We talked about that 4% dividend increase.
Right. It really shows they can generate sustainable earnings growth. That 42-year streak of dividend increases is almost unheard of.
So they're delivering for current and future investors. But looking ahead, how do you see ExxonMobil balancing these investments? Will they be able to keep up with the energy transition?
That's the big question, isn't it? They've set some ambitious goals for reducing their carbon footprint and growing their low-carbon businesses. But like they said in the call, the pace of progress depends on a lot of factors, like technology and regulation.
It's a tough balancing act. They need to maximize returns from their current business to fund these investments. But they also can't fall behind in the race for low-carbon solutions.
Exactly. It's complex, but I think they're well equipped to handle it. They have the financial strength, the expertise, and the vision to navigate this transition. It's a journey, though. We'll have to see how it plays out.
That brings us to a crucial question for investors. How does ExxonMobil's Q3 performance and their strategy position them for the future? Are they striking the right balance?
That's what we'll explore in the final part of our deep dive. We'll analyze their outlook and try to answer that very question.
Okay, so we've covered a ton of ground here. On ExxonMobil's Q3 earnings call, they're definitely performing well, strong financials, and investing in the future of energy.
Yeah, what really stands out to me is their focus on innovation, not just in their traditional business, but in new areas like low-carbon solutions and those advanced materials.
Right, it's not just about drilling for oil anymore. They're Proxima resin, and that move into battery materials. Shows they're thinking outside the box.
For sure, those are great examples of how they're leveraging their expertise to tap into these potentially huge new markets. They're not just adapting, they're actively shaping the future.
And we can't forget about that Baytown Hydrogen project, on its way to becoming the world's largest low-carbon hydrogen facility. That's a big statement.
It is. But as we talked about earlier, the success of these ventures depends on things they can't control, like how regulations evolve.
Yeah, and they've been pretty clear about the need for consistent policies, especially for carbon capture and storage.
Right, they're advocating for a level playing field where all these low-carbon solutions can compete fairly. It's a message a lot of people in the industry agree with.
So as we wrap up this deep dive, the big question is ExxonMobil finding that balance between maximizing returns today and investing in energy solutions of tomorrow?
That's the key for investors. They've got a clear vision, but execution is what matters. Can they scale up these low-carbon solutions, navigate the regulations, maintain their financial strength? That will determine their success.
And what should investors be watching for in the coming months and years?
I'd say keep an eye on their progress in hydrogen CCS and those new materials. See how they respond to policy changes and new tech. And most importantly, watch their financials to see if they can keep this momentum going.
The energy transition is a complex process, and ExxonMobil is a major player. Their performance in the next few years will be crucial. It'll show whether they can truly lead the way to a cleaner, more sustainable energy future.
And for investors, understanding their strategy and tracking their progress is essential for making smart decisions.
That's all for our deep dive into ExxonMobil's Q3 2024 earnings call. We hope this has given you some valuable insights. Join us next time as we unpack another earnings call and explore the forces shaping the markets